इस पे लाइट डालने के लिए हमारे साथ है मिस्टर सिद्धार्थ दास, जोनल हेड UTI म्यूचुअल फंड. सो लेट्स वेलकम हिम.
Mic is on. Thanks. So thank you very much, Kanchan, for the introduction. I think you did half the presentation of starting early. So that's key takeaways of the presentation. But it's always great to have a young audience. Gives a lot of energy. We take away a lot of energy from such a young audience, and good to see so many participants here. And after that very passionate session, I think it was a wonderful session to have young entrepreneurs on the stage, describe their experiences to all of you, where a lot of learnings can be had. I think we're going to have a session on finance, as Kanchan mentioned. It may be a little boring, but honestly, one thing about finance, it should be boring. Too much of excitement in finance, you may fall flat on your face. Okay, so having said that, my presentation's title is called FIRE. Okay, so what do you understand by FIRE? Anybody? What do you understand by FIRE? It's an acronym. Sorry? Pushpa. That's a good one. So yeah, so I'll come to that FIRE in a couple of slides, and I hope this would be a presentation where you will be getting a lot of life skills, how we need to manage, because managing finances is a very, very important life skill that we all need to imbibe in ourselves, right? It's good to work, good to earn money, but it's also important how to manage the money. So all of you are getting educated right now, right? All of you are engineering students, you are getting educated. What is the education going to lead you to? What is it going to create for you? What will it mean to you? It's going to be a means to all of you. It's going to be a means to probably follow a passion. Okay? It might be a means to get into a profession. Education would be a means to get into, might be a business that you want to start, or even join an existing business, or it might be for a simple employment. So it might be for simple employment, right? So the education is going to prepare you for various aspects of your future. You may call it career, you may call it work, or whatever the case may be. So education should help you do your passion. It might give you an opportunity to set up a business, or it might help you in terms of profession, or it might also get you some employment, right? At the same time, what are the passions that you may have, right? You may want to get into photography, you may want to get into sports, you may want to get into something like the fine arts, maybe into modeling, right? These are passions. But passions also require money. To follow your passions, you need money as well, right? What are the professions that you may get into? You may become an architect, you may become a doctor, you may become a lawyer, right? So your education is going to prepare you for all of this. If you look at employment, there are various employment opportunities. Standing in front of you is a salesperson. My colleague here is in the marketing team. I have another colleague here who is in the finance team, right? So you may get into a profession. You may also start up your business. You may do a trading, or you may join a family-owned business, okay? After doing all of this, the idea is that you create for yourself, which should help you in your future requirements of managing your life, okay? So that reservoir is what we are looking at to create in our working life, which will help us manage our cash flows in the future, right? The bigger the reservoir, the faster we are able to create the reservoir, we are able to achieve FIRE. And what is FIRE? Financial independence and retire early. Good? So we know the meaning of FIRE now. So that's number one. I hope you guys don't mind because you're just about to start your work and I'm talking about retirement. But yeah, everybody wants to, create a reservoir and try and retire early, right? So financial independence and retire early is the acronym. FIRE is acronym for that. So how do we create wealth? What are the methods of creating wealth? It's actually very boring, right? As I said, creating wealth is actually a boring subject. You have to invest a sum of amount, an amount. You have to invest it regularly for a long period of time. You need to ensure that money is working for you. Okay? That money works for you and you get into a corpus. You create a reservoir for yourself, right? So just to give you an illustrative example, you are investing, let's say 15,000 rupees per month. You invest every month for 25 years, which is a very long period of time. You let that money work for you. How do you let the money work for you? The money does compounding for you, right? I think in class 8 or 10, I think class 8 or 9, we have learned about the compound interest formula, right? Amount is equal to principal into 1 plus r by t raised to power 1 plus r by 100 raised to power t. So you let the money compound for you at a particular rate of. Just for illustration, we have taken 12%. And this compound will get you to about 2.8 crores in a period of 25 years, right? So this is an illustrative example just to give you an input as to how compounding works, right? However, what is important is, and this is a data that I have taken to a lot of my distributors, a lot of my clients. How many of us have actually done 15,000 per month for 25 years and got to 2.8 crores? Very few. The actual reality is we are in the mutual fund industry. We have done a lot of sessions on financial planning. Actually, very few people have actually followed this and come to a corpus of 2.8 crores. What is the reason for that? The reason is simple: we lack discipline. We lack discipline. We wait for 25 years. There'll be some event which might happen, which might force us to pull out the money. We will not allow the money to work, grow for us, and therefore we will not get to the corpus of 2.8 crores.
फायर से क्या समझ आया? क्या आवाज नहीं आ रही?
Louder.
यही समझ आया? और क्या मतलब है फायर का? हाँ, तो वो एक एक्शन के साथ तो बताओ. चलिए कंटिन्यू.
Thanks for that, Kanchan. So, as I said, there are three fundamentals of finance that one needs to understand how to create wealth. Begin as early. The power of compounding, because compounding is something that all of us need to be cognizant of, how it works, when it works. I'll come to that in a bit. Power of compounding is another very, very important aspect of creating wealth. And the third aspect of creating wealth is that of ensuring that you keep track of one thing that eats away your money, which is inflation. Inflation is something which will eat away your money, eat away your corpus. One needs to keep track of that because that is something which will impact your final corpus. Begin early. I think enough has been said about beginning early, but I'm going to give you some examples just to illustrate how beginning as early as possible is going to help you in your wealth creation journey. Now let's take an illustrative example. Let's say a person is born and we are looking at year 0, and we look at retirement, let's say at about 60, when most of us would aspire to retire after generating a reasonable amount of corpus, right? If you look at this period of 60 years, and if you look at a compounding rate of 9% at an investment of only 10,000 rupees per month over 60 years, at a compounding annual rate of only 9%, you are creating a corpus of almost 28 crores. Okay? Can anybody take a guess as to what that corpus would be if the compounding rate is at about 12%? At 9%, you are at 28 crores in 60 years. What the corpus would be if the time period is the same, but the compounding rate is increased to 12%? 38 crores. Sorry? 80 crores. 42 crores. The figure is 129 crores. Does it make it interesting? Yeah? So, what I would suggest is, if there is a baby born in any one of your family at any point in time, please advise the parents to start an SIP for 10,000 rupees. And the baby is sorted for his life. Touch wood. Another example, and this is the lost compounding opportunity. Again, I'll come to how compounding works. The lost compounding objective, you look at the period of 30 years from the age 30 to 60. Supposing somebody decides that, okay, I'm now 30, now I have to start investing, and he or she thinks that at about 60 I'm going to superannuate, and I'm looking at 30 years in between, investment of the same amount of 10,000 rupees per month, compounded at 9%, you reach a corpus of 1.83 crores. What was the amount when you let the money compound for 60 years? At 9%? 28 crores, right? And look at this amount here, 1.83 crores. And if you look at 12%, this works to 3.49 crores. What was the amount when we did it for 60 years? 129 crores, right? So compounding works when you give time. So the earlier you start, the more time you have, and therefore compounding. And then another thing, when you look at a corpus which is a meaningful corpus, compounding on that becomes even bigger. I'll come to another illustrative example for that. Okay? So we need to give time to money to grow itself. And just to give you, just to tell you that 12% is not a figure that is out of this world. I'm giving you a figure which is not possible. The markets, by their own, over the last 45 years, from 79 to 2005, over the last 45 years, have given a compounded annual average return of 15.01%. Okay? So the market, simple markets, all of you would be born post 2000? Yeah? So if you take another 20 years before that, the markets have given 15%, which is almost 654 times the money has been generated over the last 45 years. So time is a very, very important factor in helping you to create wealth, is the point that I'm trying to make here. What is the cost of delay? Another subjective example. Let's look at a retirement corpus of 1.5 crores, which will be compounded at 12%. These are illustrative examples again. And you look at a start date of 25 years, a SIP start date. Everybody is aware what is an SIP? Systematic investment plan. This is a feature that is given by mutual funds, any mutual fund, to invest regularly into a scheme, into a mutual fund scheme. Let's say the skip start age is about 25 years. Investment required to get to 1.5 crores is about 2,309 rupees. Every 5 years you delay. You go to 30 years, you start, 35, 40, 45 you start. To get to the same level of 1.5 crores, your investment amount, your SIP amount almost doubles. Every 5 years you delay, your investment amount, your SIP amount sort of doubles. So that is the cost of delay that impacts your wealth creation over a period of time. So every delay of 5 years, the SIP amount doubles up. Another example. Now let's say Mr. Ramesh started investing when he was 25, and he invested 15,000 rupees at, let's say, a compounding interest, a compounding return of 10% for 5 years, for till about 60 years, which is about 35 years, he generated a corpus of 9.6 crores. Okay? He generated a corpus, retiral corpus of 9.6 crores. Mr. Suresh did the same amount, but he started when he was 45, 20 years later. What is the final corpus he generated? About 75 lakhs. So he's minus 9 crores because he started late by 20 years. Right? So again, an example to highlight how starting early is a huge benefit in terms of your wealth creation journey. Another example, Mr. Suresh says, yes, I am 45, I have started earning more, so let me increase my investment amount. I'm not going to put only 15,000 rupees, I'm going to put more than double, which is 35,000 rupees as an SIP. But I have the same amount of time, right? I'm going to retire in 60, so 15 years. I invest 35,000 rupees, still my retiral corpus reaches 1.75 crores, which is still less by about 7.8 crores had I started with a lesser SIP amount 20 years before, right? So I hope I have reiterated the point of time, giving investment time to grow, to create your surplus. Another example of how to create a meaningful surplus, and this is a tool that is given to investors in mutual funds, which is called a step up, right? You are clear about SIPs, systematic investment plan. You have something called a step it up. I'll give you an example. Now we have a lady by the name of Alicia, started at about 20 years of age, doing a SIP amount of 5,000 rupees, generates 46 lakhs of corpus at the age of 40. So she invested for 20 years and made 46 lakhs, and the compounding rate is again 12%. Okay? We have Sharan, who started 5 years later, did the same amount, but his corpus is almost half, right? Just a period of 5 years, and his corpus is reduced to half what the example in the first case was. Mr. Vaibhav started less than another 5 years delayed, tried to increase his corpus to double the amount, still his corpus is less than half of that what Alicia generated, right? So even if you start late or you increase your amount, both ways you are not getting to the same degree of corpus that the first example gave you. There's another one which is called Ishita, who started at the same age as Alicia, 20 years of age. She started with the same SIP amount of 5,000 rupees, but the change that she did was that she added 1,000 rupees every year to that SIP amount till about 40 years of age, and her corpus at the age of 40 reached what? 1 crore, right? So who's the most intelligent of all, right? Time, step it up, just 1,000 rupees. Whether you do a business, whether you are working, you would have annual increments. Please ensure that is spent judiciously by investing incremental amounts into your investment plans, right? So that is the message here. Power of compounding, I messaged this. I told you about the power of compounding. Mr. Albert Einstein, famous scientist, said compounded interest is the 8th wonder of the world. One who understands it, earns it. One who doesn't, pays for it. One who doesn't understand what compounding is, pays for it. It's a loss for that individual. How does it? Let's play a game, okay? Now, supposing I ask each one of you to ask your parents to give you 1 rupee as pocket money on day 1 of the month, okay? Got it? 1 rupee, first day of the month. Every day, double that amount. So second day you get 2 rupees, third day you get 4 rupees. Okay? How much will you make at the end of 31 days? Any guesses? Any guesses? 10 lakhs? 1 crore? Any takers for 1 crore? 10 crores? Everybody understood the question? 20 crores? Yeah? How many for 20 crores? 30 crores or more? How many for 30 crores or more? Okay, that's it. 30 crores or more. It's not a small amount, huh? How much will you get? You will get 107 crores at the end of the 31st day if you start with 1 rupee at the start of the month. Day 1, 1 rupee. Day 10, 512. Day 15. So this is the power of compounding. Looks good? Yeah? This is the power of compounding that I'm talking about. And this is the magic of power of compounding. All of us need to understand this in our investment journey, because this is something that will help us create a surplus. Another game, I think all of you would have heard about this game sometime or the other. This is this famous game wherein, you know, the Nawab said, I'll give you one, one of the courtiers of the Nawab said, give me 1 gold coin on the chessboard and double it till I reach to 64th, you know, the 64th square. And what is the Nawab agreed? He said, I have lots of gold to give you, right? What happened to the Nawab? Right, sorry? More than bankrupt, right? More than bankrupt. This guy ended up giving, you know, this figure is something which is very difficult to read out. It's actually 1,84,476 lakh trillion gold coins, right? And this 1,84,467 trillion gold coins, where 1 trillion is equal to 1 lakh crore by itself. So that is the power of compounding, right? So it's not bankrupt. I mean, he would have, you know, lost a lot more. So again, coming back to the main factor about compounding is this time. How much time are you giving your investments to grow? How much time are you giving a meaningful corpus to grow? Because to get to a meaningful corpus, you need time. And then to get to that meaningful corpus to compound, you need again time. So time square is what you need to be working on. Again, as I mentioned, simple, you know, last 45 years, the markets have given 15% CAGR. So these are not numbers that we are trying to give, which are absolutely out of the world. These are very, very realistic numbers that we are having. Inflation. So this is the one that does what? What does inflation do? I mentioned this earlier. Let's see how many of you were listening to me. What does inflation do? Thank you very much. Inflation eats away the money. Like termites eat away wood, inflation eats away money. One has to be very careful about inflation. Inflation reduces purchasing power. How many of you have seen this 5 paise coin, 10 paise coin? So good that you have seen, because, you know, after a short while, I don't think these coins would be in circulation anymore. Right? So all these coins are going to go out of, so the 5 paise, 10 paise, 20 paise, all of them will go out of circulation because you can't buy anything with it. Some of the faculty members, I think, would have bought toffees for 10 paise, right? 5 paise, but I'm sure none of you would have got toffees for 10 paise, right? So what are the inflations? Our necessities in life, like having a TV, a camera, a phone, or a fan, this is now changed to much higher end gadgets. A TV which used to cost 3,000, 4,000 rupees now costs minimum 50,000 bucks. A telephone which used to be supplied by BSNL or MTNL on rent, now, you know, 50,000 rupees is the base, I think, from where a lot of you would be buying cell phones on, right? 25,000, 50,000 bucks. A small fan will not do. You need to buy air conditioners. So these are all increased expenditures. These are lifestyle increments in necessities which are going to require funds. What is a lifestyle inflation in our material aspirations? Now you have high-end products that are required, whether it is watches, jewelry, bags, fashion accessories, whatever the case may be. Just to give you an example, iPhone was launched when? In 2007. It used to cost about $500, right? The value of a $500 today, iPhone is roughly about $500 if you sell it to the scrap. Had somebody bought shares of Apple for $500 at that point in time in 2007, which was trading at $4 per share, 125 shares would be roughly at about $31,250 or 28 lakh rupees, an increase of about 63 times in US dollars or 112 times in INR. This is also important. 63 times in USD, 112 times in INR. This again is an important factor because you look at currencies, how the currencies have given returns of. That is another aspect to be looked at. Again, if you look at a Maruti car, a Maruti Alto in 2003, cost about 3 lakhs, currently probably would be selling off at about $15,000, which is a reduction of almost 20 times. Whereas if you look at a Maruti Suzuki share, which was trading at 3 lakhs, would have bought it at 3 lakhs, you could have earned, you could be at roughly about 3 crores as of now in terms of the value of the shares, which is about 103 times. So financial independence, retire early, is what we are all aspiring to. We need to ensure that we plan ourselves. All of you are at a very, very important stage in life. Once you start earning, it is important that you have the necessary skills, aptitude to ensure that you save, invest properly so that you can create a wealth. Some key takeaways from the presentation: beat inflation, invest in growth assets. That's very critical. You need to ensure you can start with as little as 500 rupees a month. SIP is a tool which can give you an investment mechanism for as little as 500 rupees per month. Invest early. I think I have made that point very clear. Idle money means nothing. Don't keep money idle, keep investing. Invest with a plan. Invest in goals. Liquidity matters. What is in your control, what is easy to sell. Please ensure that you have the right asset class to your investments, because a lot of times we buy assets which may not be liquid, which may not be easy to handle. That will be creating a problem for us only. Also, the power of compounding, the eighth wonder of the world, is something that one needs to take care of. Thank you for being a patient audience, and all the very best to all of you.